My name is Mrs. Leteba. I'm an economics educator. This morning we're going to look at chapter 4 of LO1. Now chapter 4 basically it focuses on the foreign exchange market. Therefore for today I want us to concentrate mainly on the aspect which we really need to know that will help us at the end of this year to be able to master our content. I'm sure by now you must have your examination guidelines, You must have your examination guidelines with you, which means that you need to know exactly what is expected from you, what are the challenges, what are the things that we need to emphasize on. One other thing that I want us to have with us right now, as I'm with you right now, is you need to have a pen, you need to have your notebook, you must also have a calculator so that you can take notes as we go on. Now, let us look at the scope of our examination guideline. Now, topic number 4 is all about foreign exchange. It's all about foreign exchange market, meaning that the content that you must learn with regard to this unit is that you need to know the main reasons why do we trade, meaning that you must give a brief discussion on the main reasons for international trading. You must also be able to distinguish between the demand and supply reasons. That is why I was saying you need to have an examination guideline, meaning that it guides you to know exactly what is expected from you. The other thing that we must learn is the effect of international trading, the balance of payment account, the calculations, the types of account that we have, the foreign exchange market, the establishment of exchange rate market, and the corrections of balance of payment account. As we know, it has the surplus and the deficit. Now, on the side of the scope, we need to learn the depth and the examinable content, like indicated earlier, that it is important for us to know what is expected from us as learners. We need to give a brief discussion on the main reasons of international trading. Obviously, this one, it tells us it is a possible essay. It is a possible essay for exam. We need to prepare it for now, for junior exam, for trial exam, even for final examination. It's possible it can take up to 40 marks to discuss this essay. Therefore, good people, it's very important that we take note. The other thing is that the effect of international trading, as we can see, it is indicated here that we need to make a brief discussion, meaning that by brief discussion, we are expected to discuss. It can be part of an essay also. That's why we need to take note of this part. The other thing is that balance of payment account. You need to know what is balance of payment account, the purpose of it, meaning, and then we need to analyze and interpret the balance of payment account, and also give a brief overview of the sub-accounts. Take note, there are sub-accounts that you need to know regarding the balance of payment account. The other thing which is very important, we need to define the foreign exchange market, and also we need to draw and interpret graphs, provide discussions regarding, very important, we need to provide discussions regarding the demand and supply of foreign exchange rate, and a brief discussion on what? On market interventions. The other part that we need to take care of is this one of the establishment of foreign exchange rate. The establishment of exchange rate, it means that we need to know these systems. We have about 3 systems of exchange rate. Namely the free floating exchange rate, managed floating exchange rate, and the fixed exchange rate. And also we need to take note that we must be able to calculate the terms of trade and know exactly what are the terms of trade. And also free trade and protectionism. About protectionism, we'll learn more about the tariffs that are used to control import and export within our country. And also the South Africa's foreign trade. The last one is the correction of the deficit on the balance of payment account. As we can see, from this balance of payment account, when we calculate them, it might happen that we experience the problems whereby we find we import more than we export. We are then saying we'll experience a deficit on the balance of payment. Now we need to know how to correct that disequilibrium which might occur. Therefore, our government has got a lot of policies that are put in place to ensure that it controls that. Now, let us start. It's very important that we know why do we choose to trade with other countries. The fact that there is no country that is self-sufficient or the country that has all the resources, that is why we must trade with other countries. You might find that one country has got a lot of resources, therefore they trade the surplus that they have with another country that has which cannot produce similar quantities like they do. Like we can make an example of South Africa. South Africa can produce lot of for example, can produce lot of wine, and Brazil produces, say, maybe lot of coffee. It means that South Africa will have an absolute advantage of producing a wine. Therefore, they will produce that particular product and trade it with the country that produces that product less. Like, for example, Brazil produces coffee, then South Africa produces coffee too, but the amount or the rate at which South Africa produces coffee is not as much as Brazil do. In that way, we are saying a country that produces a surplus will exchange it with another country. So there are a lot of reasons why countries trade. Now, for now, we need to know why countries trade. We're going to focus on the two reasons why countries trade. Like I have indicated, if ever a country produces a surplus, maybe it might exchange it with another country. One other thing that we can think of is like, say, for example, what is it now? Say maybe we do what as a country? We produce more of that particular product, we then trade it with another country. So there are reasons why we trade with other countries. What is important here, we need to know the reason why we trade with other countries. Like I have indicated earlier, we trade because a country has a surplus of a particular product, therefore it will trade it with another country. So in this chapter, we'll focus on the international trading, meaning that we look at the import and the export. We import goods from other countries and export. We import goods from. What is important here? We need to know the reason why we trade with other countries. Ne? The fact that there is no country that is self-sufficient, that has got all the resources, that is why we import and export goods. So there are two reasons why we trade with other countries. The first one is a demand reason. The second one is a supply reasons. Now, here are the reasons, the demand reasons, excuse me again. So we have the demand reasons why we trade with other countries. Let us have a look at the demand reason. Number one, firstly, the size of the population will determine the quantity demanded. We'll find that sometimes because the population is growing so fast, the demand for goods and services becomes so high. Therefore, People might demand product which came from abroad to satisfy their needs. The second one is the income of the population. Now, if the size of the population increases, it means that people will demand more goods, especially goods which came from abroad, because the size of their income allows them to purchase such product from abroad. I can make an example. Right now, there are people here in South Africa who are no longer demanding a product which are produced here in South Africa. Others, they look more like Italians. Others look more like Chinese, because those people, they prefer to consume a product which came from abroad. Now, the size of their income allows them to purchase such goods and services. The third one is an increase in wealth. So once a person becomes wealthy, it means that his or her income become more sound. Therefore, that person will spend his money buying luxurious product. As we can see, even here in South Africa, there are so many people who are like, they prefer maybe to buy cars from abroad. They are driving German cars. They are wearing clothes which are from abroad. They are like that because their wealth status do not allow them really to buy goods here in our country. The fourth one is preferences and taste. Then preference, it depends on individuals on what they prefer. There are some people who will tell you they don't prefer to buy goods of South Africa because of quality, blah, blah, blah. But others will tell you, if we buy foreign product, it's like they have good values, therefore they prefer to buy such goods from abroad. Therefore, they will demand a lot of goods which came from foreign countries. That is why we are saying we have the demand reason. The fifth one is consumption patterns. With regard to consumption patterns, we find that as a country develops, the standard of living also improves, meaning that people who are from lower developing areas, they will prefer to buy only basic foodstuffs. But people who are in developed areas, they tend to buy a lot of goods which came from abroad, meaning that there will be a difference in terms of what? Of consumption spendings. And then for us to recall all this information regarding the demand reasons, very important, we need to recall the following. The size of the population, income, wealth, preference, and consumption. So let us look at how can we recall these things. To make it easier for us to remember all these things, it means that we need to go on this. P for population, I for income, W for wealth, P for preferences, C for consumption. You can call it PC, like we normally do. Say, you know by now when you say lol, what do you mean by that? We can also do the same to recall this information regarding the demand reason. You just call it QPC, meaning that the population, we know the size of the population, how will it influence the demand for goods and services in foreign countries. The other thing is the size of income, meaning that as income increases, we'll tend to demand more goods and services. W for wealth, obviously when people are wealthy, there are some goods that they will regard as inferior goods, whilst other goods will be regarded as normal goods. Then they tend their behavior on consuming goods and services. So their wealth status will allow them to buy goods in foreign countries. The other one is P. For P, it means preference. What you prefer as individuals might differ from one another. It's therefore very important that we know that P stands for preference. Therefore, when we prefer certain goods over the other, it means that we might even tend to dislike goods that are produced in our country and tend to buy goods that are produced in foreign countries. The last one is consumption. Goods that we tend to buy because of the standard of living. Most developed countries will find people like they prefer to buy goods that are more luxurious, whilst developing countries, people will tend to buy only the basics. That is how to recall or to remember the demand reasons. The other one that we need to know is the supply reason. Now, with regard to the supply reason, the second one is the supply reasons. Like I have indicated to you, the supply reasons is one of the reasons why we trade with other countries. Therefore, there are several aspects that we need to consider under the supply reason. Number one, the natural resources. Natural resources are not evenly spread throughout the world. There are some areas that are fortunate enough, they do have resources, like South Africa is very rich with mineral resources. Therefore, as a country, we trade those resources to foreign countries. The second one is the climate. So the climatic condition have an impact on the level of goods and not the goods, on the kind of product that might be traded. Like, for example, the climate varies from one region to another. You can imagine about the whole universe. It means the climate is drastically different. Like, for example, the climate of South Africa do not allow us to grow rice. That is why we need to import rice from foreign countries. And also coffee from other countries, because the climate of this country do not allow us to do what? To produce those products here. The other one is labor resource. As we know, labor is one of the critical factor in this country. We are running short of skilled laborers as South Africans. So what we normally do, we import skilled laborers from foreign countries. Like right now, if you can look in our hospitals, many people who are working there are the foreigners. It means that we import those skills from foreign countries. The other thing is that our country consists of many people who are unskilled. Others, at least, they do have some skills, but they do not cover all the demand of our country. The other thing is our technological resources. Advanced technologies is one of the reasons why we are trading with other countries. We know South Africa, we depend on foreign technologies. We don't have our own technologies here. Therefore, the countries that produces a lot of goods are the ones who have improved technologies. We therefore trade because of those differences in technologies. The other one is specialization. If a country specializes with a particular product, obviously it will mass produce that product. Therefore, it will trade it with another country. The last one is capital. So it's not easy, really. South Africa, like I have indicated, we have plenty of natural resources that we are proud of, but our problem is that we don't have the capital resources to do what? To transform those natural resources. We therefore export them in unprocessed form because a country itself, it lacks capital resources. Now, let us look at how can we recall this information. It's going to be easier for us. Let me go there. Sorry. How can we recall this information? So there are 6 ways in which we can recall the reasons for supply. Firstly, we'll use R. R is for our resources, meaning that our natural resources are not evenly distributed, like I have indicated earlier, that natural resources are not evenly spread throughout. Therefore, you might find that a country A do have a lot of resources, while country B do not have those resources, therefore will trade with another country in that instance. The other one is C, climate. So climatic conditions also influence the supply of goods and services because the climate varies from one country to another, from one region to another. That is why we are trading with foreign countries. The other one is specialization. If you produce more of a particular product because you are specialized in that particular product, then you will trade it with another country. The other thing is technology. The more advanced technologies that we are using, it allows us to mass produce goods and services. So by so doing, it gave us an advantage of exporting goods to foreign countries if we use advanced technologies. The other thing is labor. So South Africa, we lack skilled laborers, as I've mentioned earlier, that we lack skilled laborers. Therefore, what we do, we import labor from foreign countries, and then it's how it works. The other one is capital. The last one is capital. So as a country, we don't have capital that is used by developed countries. We therefore import capital from abroad, which enables us to produce goods and services. Then, with regard to this unit, you need to know the following. You need to know the questions that might be asked with regard to this unit that we have just went through. Let us see. First one, you must use examples to discuss the demand and supply reasons for international trading. For about 40 marks, you must be able to use examples, as many examples that you can, to discuss the demand and supply reasons. The second one, you can be required to use examples to distinguish between comparative and absolute advantages. The other one is this one that I'm going to do right now, where you will be expected to discuss any effect of international trading. Now, we have the effect of international trading, meaning that what actually affects international trading. International trading is affect the economy in the following ways. Number one, mass production. Secondly, efficiency. The third one, globalization. And the last one is specialization. You might be required to discuss this effect. Therefore, you need to know, when we talk about mass production, what do we mean? When we talk about efficiency, globalization, and specialization. Okay, that is why I was indicating that it's very important that we discuss any effect of international trading. Okay. So these are the aspects that we really need to know with regard to international trade. Okay, now we move to another unit which I have indicated earlier, or is very important to know the second unit, as it might appear in our question papers. Therefore, good people, you need to know what is a balance, what is a balance of payment. Like, as we can see, a balance of payment is a statement of a country's trade and financial transaction with the rest of the world over a particular period of time. What is important here, because you might be expected to define what is a balance of payment. So the core of the statement here, we need to know a country a country shows trade and financial transaction. Those are the core for the statement, meaning that a balance of payment itself, it shows the record. It shows the record of the country's trade and financial transactions with the rest of the world. Therefore, it's very important that we know what is a balance of payment. Now, South Africa's Reserve Bank publishes our balance of payment and updates it every quarter in its to be. Balance of payment consists of 4 components which we need to know. 4 components, very important, or the sub-accounts. Namely, we have a current account, we have a capital transfer account, we have financial account, and lastly, we have a changes in reserves. Now, it's very important that we know these kinds of account of balance of payment. So let us quickly look at our example here. Sorry. This is an example of how a balance of payments looks like. This is a composition of the accounts that are found in our balance of payment account. Like I have said, we have a current account. The second one is capital transfer account. The third one is financial account. And the last one is changes in reserves. These are the 4 accounts of a balance of payment. Therefore, it's very important that we know the items of each account. Like, for example, the composition of current account. Number 1, it composed of merchandise export, net gold export, service receipt, income receipt. 1, 2, 3, 4. All these must be added. They must be added when we calculate current account. Meaning up to here, we add those items. Then, we less merchandise import, we less payment for services, less income payment, less current transfer. Then you will get a balance on current account, which can either be positive or negative. What will control or determine our current account to be positive or negative is the level of import and export. If import are greater than export, it means that a country will experience a deficit on the balance of payment account. That is where we'll find that we'll have a negative balance of payment on current account. Let us do example, this little example here to indicate exactly what is expected from you. For 2000, the year 2000 and 2011, it means our current account was like this. Merchandise export was this amount. Then we'll say merchandise export plus net gold export plus service receipt plus income receipt. It will give us a balance on, not the balance, sorry. It will give us what are the import, the inflows in our country. Then we have to subtract the merchandise import, we subtract payment for services, we subtract income payment and current transfers. It will give us the answer of a balance on current account. That is how it should look like. And then with regard to capital transfer account, which can either be positive or negative, those are the transfers from other countries. Like, for example, if I decide to stay in America when I retire, then it means that my pension has to be transferred to that country. That is why we have a capital transfer account, which costs something like 359. The third account is a financial account. Financial account consists of 3 sub accounts. meaning that we have a direct investment, portfolio investment, and other investment. This other investment, we have what? A hot, you can say hot money. It's a hot money. You can call it like that. Therefore, how do we calculate this account? That is important. It means that we add this amount. Here we're going to subtract based on the information that we are given. Sometimes here we might be required to add or to subtract. It depends on the information that we have. Say, if you take this information, 6158 minus 1878, the answer that we'll get is a net. It's a net direct investment. Then the portfolio investment, what we do there, we will subtract 11,793 to 25,628. Then the answer that we'll get is called the net portfolio investment of a negative 13,835. And then the other one is other investment, which consists of liabilities and asset. What we do there, we add the two. We add 1, 2, 3, and then the answer that we will get here, it will be 11,468. To get a balance on financial account, what we're gonna do, we add this amount. 1, we add the second one, we minus this one, and then we add to this one. It will give us a balance on financial account. So a balance on financial account is 1909, meaning that we're gonna add 1, 2, 3 together. It will give us that. Then we have unrecorded transaction. All the omissions which occurs on the above account, it means that they will be added on this one, unrecorded transactions. The last part that we're going to look at is the changes in the reserves. How do we, because I'm concentrating on the calculations, how do we add the changes in reserves? It means that the information that we have here, we're going to add this information, meaning we're going to subtract this one. We add this one and subtract this. The answer that you'll get is a change in cross gold and other foreign reserves. Now, it's very important that we recall this information. Sometimes these items might be mixed up in our questions, where you'll have to sort or to rearrange the items. Maybe I might take this information of the merchandise export and put them here, and take this one just to make you know how each item is calculated, meaning that you must learn this information by your heart. There is no other way you can recall these things except from trying to recall them by your heart. Normally what I do, I just take the first letters so that I can remember the whole thing. This one, I normally call it like this to make you, let me make an example for you to remember these ones. I am using to remember this one. How do I use to recall this information? Okay. It's me, Sai. So we're going to use Ming Sai, meaning that merchandise export, net gold, service receipt, and income. You will recall how to work on these things only if you can make the way in which you can remember them. Now, so that you cannot mix the item at the end of the day, your account starts to be incorrect. Let us recheck it again, or let us redo it. To recall this information, what is important here, you need to know the me, NG, S, and I, this one are added. We add this together and subtract merchandise import. You can say MI P I C. MIPIC, it means that we subtract this one, and the answer that you will get there, it is a balance on current account. It is a balance on what? On current account. It is a balance on current account, the answer that you'll get there. Just like this here. This is the simplest way in which you can recall this account, especially this current account. So let us move to financial account. How can you recall it? You can just write something like a DOP. D-O-P, meaning your DOP. We have direct investment. O, other investment. P, portfolio investment. You need to recall all these things. That's why I'm doing DOP here, so that I know this is a direct investment, I know it's other investment, it's a portfolio investment. In this manner, you will be able to remember how this account works. Let us move out here. Here is an example of a current account. I've made an example of a current account. Like I have indicated, sometimes these items might be mixed up. Here I've managed to mix up the items. So what you must do, you must make sure that this account do balance at the end of the day. You get the correct answer. With me here, because I already knew that I have me, I have NGSI, Mingesai, meaning that for me to understand this one, I must first do what? Add merchandise export, add net gold, add service receipt, add income receipt, and subtract what? Merchandise import, payment for services, and also income payment. So these ones are the ones that I must subtract. That is why I said I will bring to you this calculation so that you know exactly where does each information belongs, so that you don't mix your items. Because the moment when you mix your items, it means that you're going to get an incorrect answer. Here are some questions that you need to know. Here are some questions that you need to know with regard to balance of payment. Very important that you must be able to define what is a balance of payment account. Like I have indicated to you, a balance of payment account, it is an account which shows the record of trade and financial transactions of a country with the rest of the world. The core statement there is that you need to know what are we actually this account composed of. It consists of 4 components. Okay? This account consists of 4 components, namely a financial account, capital account, capital transfer account, current account, and changes in reserve. So you can make it to be simpler for you by doing what? Say you do triple CF. You can do triple CF like this. Say you want to recall these accounts. Therefore, what you do, you just write triple CF. These are the 4 components. These are the 4 components of balance of payment. By CCCF, I mean we have the current account. We have current account. We have capital transfer. We have changes in reserve. Changes in reserves. And also we have financial account. Also have a financial account. These are the four sub-account or component of balance of payment. So let us go back and check the questions. We have already done this to list the component, and we must be able to calculate trade balance and provide a formula. Now, to calculate a trade balance, what do we need to calculate a trade balance? We go back to our, we go back here. To calculate our trade balance, what do we need? Okay, to calculate trade balance, I will use another color so that you can see. To calculate trade balance, we add merchandise export together with the net gold. Then we subtract merchandise import. That is how we calculate what trade balance. So it's very important that we remember how to calculate a trade balance, because now with regard to trade balance, we said, what do? We take merchandise export plus net gold export. Then we subtract merchandise import. The answer that we'll get here is our trade balance. In our case here, let us see, our merchandise export is 194,223. Then our net gold will be plus 27,838 minus, we subtract merchandise import of 189,411. Then use your calculator to do that, and then the answer that you'll get there will be equal to our TB, our trade balance, simple as that. Then we move to another one. Let's quickly go through, whereby we must be able to calculate the balance on current account. I've already indicated to you how to calculate a balance, on current account. I've already done that, so let's go and review it quickly. How to calculate balance on current account? What do? We add, subtract, and this. Then the answer that we get is this one. My pen is not right now. The answer that we'll get, this one with pink color, it will be our balance on current account. Then let us move to another thing. So one other aspect that is very important for us to know is the exchange rate. Therefore, the exchange rate, we need to know exactly what is exchange rate. As a country, we have our own exchange rate. So exchange rate is the price in which one currency can be exchanged for another. So here in South Africa, we are using rand, then other countries are using their own currencies that we know. Like for example, rand against dollar, we know by now is something like 10 rand 68, meaning that you need to have 10.68 to buy $1. And then the other thing is that that we need to know the leading market in New York, in what exchange rates is in New York, London, and Tokyo. So in South Africa, the forex is also known as the interbank foreign exchange. That is, these are the concepts that I want us to be familiar with. The other part that I want us to look at quickly as time is running out is the demand for foreign exchange. So the demand for foreign exchange is very important that we know why countries demand foreign exchange rates. So as a country, we do demand foreign exchange rate for several reasons. Like South Africa, when we import goods, paying for interest, outflow, and capital to other countries, tourist expenditure in foreign countries. Very important. And then the supply for forex, we need foreign exchange for exporting goods, receiving interest, foreigners investing in our country, tourists visiting our country. That is how foreign exchange rates are determined. The supply of foreign currency are determined in our country. The other thing is the interaction of demand and supply. Very important. We need to know that part. Let me quickly go through. There is another slide. One thing that I want us to know is this establishment of exchange rate. There are three kinds of exchange rate. Free-floating exchange rate, which works automatically. The controlled one, meaning the Reserve Bank will control it, and the other one is the fixed exchange rate. Then, with regard to the terms of trade, what is important here, with terms of trade, what we do, we compare the country's export price with its import prices. So we need to know the formula which is used to express terms of trade. The formula that is used to express the terms of trade, very important that we know the formula. The formula that is used to determine the term of trade is, say for example, we look at the export, we divide it by number of imports and multiply it by 100. That is the formula that we use. This is the formula that we use. Then we go back. The other thing that I want us to look at, I think is the last part, which is very important. The policies that can be used to control a deficit on the balance of payment account. Like I have indicated, if a country experiences a deficit on the balance of payment account, what they do is that developed countries might borrow those countries, or they can lend money from IMF, International Monetary Fund, or World Bank. It can help a country to recover from a deficit. Let me quickly get this one. So there are several policies which are used to reduce large deficit. Those policies like promoting export, reducing import, expenditure reducing policies, and lastly, currency depreciation. Those are the policies that can be used to control a deficit on the balance of payment account. One other aspect which I think I should bring to your attention is this one of interpretation of graphs. I will go back a little bit to the demand of currencies. Demand and supply of foreign exchange. At least some of you, I'm sure you are familiar with this graph, which illustrates exactly the demand and supply of foreign exchange. This graph indicates at this point is our equilibrium point, where demand is equal to supply for dollars. Therefore, this is our initial curve. The supply, if ever it happens that there is a shift of supply to S1, what does that mean? It means that there will be a decrease. There will be a decrease in the price of dollars, whilst on this side of quantity demanded, there will be an increase in quantity demanded for dollars. So we must also think what will happen to the price of rand in this situation. We are saying if the price of dollars move from 14 to 12, it means that our rand do appreciate. Our rand appreciated. But if the price move from 12 to 14, it means that our rand do depreciate. Then we'll see the quantity will increase as the price of dollars decreases. Okay. Now, I think it's very important for us to consider the following things. So for today, what we have learned is that we need to discuss the main reasons for international trading. These are the topics that we need to remember. The reasons for international trading. The second one, the effect of international trading, which I have indicated to you clearly that these ones can be an essay. A balance of payments account, you need to know those 4 sub-accounts or the components of balance of payment. How to calculate each account is very important. Bearing in mind, current account, the items might be mixed up. Therefore, you need to know how to rearrange them. Foreign exchange market is where we deal with currencies. So we need to know that information. Lastly, an establishment of exchange rate and the correction of balance of payment account. You might be asked an essay in an essay form to discuss how a country can correct a deficit on the balance of payment account. That's why it's very important that we know exactly how to correct a deficit on the balance of payment. Now, it's time for me to leave the class and say goodbye.